All right, guys, this is Paul Singh, the market speculator, with a video here from bullsonwallstreet.com. We're going to talk today about how to trade overreactions to earnings gap downs. We can call it the gap down reversal, and a lot of the time you're trading remount type setups. So let's talk about it with Netflix here. This is a current trade I just entered today about a half hour ago. So you can see the candle here. This was the entry today. And if we look over at the Bulls on Wall Street swing trade alerts dashboard here, this is the report I put out earlier this morning. There's a video here, but in the recent notifications, you can see here, we entered 400 Netflix at 94.86, about a 3-point stop. Now what I wrote here was, the setup is a remount of the 50-day moving average on solid volume after a gap down and also a moving average sandwich type setup. So we're going to go over these three concepts: the gap down reversal, the remount setup, and this moving average sandwich that I use to help me with these trades. So let's illustrate that with our current trade here, Netflix. Now, if we pull it back here, you can see Netflix has actually been in somewhat of a topping pattern here, going back to 2015. Hasn't been doing that great in 2016, although it has made some nice runs, nice tradable runs here. Reversal here from 81 to the moving average at 106. So 20 points here, and it was really nice reversal here, easily tradable reversal. But looking here more closely, this big gap down on heavy volume was an earnings gap down. And what happens a lot of the time with these earnings gap downs, it's an overreaction to some news during earnings that just causes everyone to panic. And then you get a reversal. As we can see here, the first thing I do when I see an earnings gap down in a stock that everybody's watching is I look to see if there's any follow through. So we usually see some consolidation here. Every once in a while you see one that continues to follow through right away. But I look for that consolidation here, and then I want to see which way the stock ends up breaking. Now with Netflix, it's basically held that gap down level very well. Never broke the low here from the day of the gap down. And then after about 5 days of consolidation, you got this breakout here. And since then, it's been moving nicely into this gap range. So I want to see how the stock is reacting in this gap range. Now, every once in a while, I'll enter on a break of this consolidation, and Netflix would have been a good candidate for that. As you can see here, I have this arrow listed here because I pointed this one out to Trade Report members. I didn't end up taking it myself, but it was a trade idea here. The reason I didn't, I had so many other positions that I just didn't need to add another position. Otherwise, I very well could have added at this point, and it's made a nice front run here from 91 to 95. Now, what keyed me into the trade today was Friday's breakout of the 50-day moving average, and that's the moving average remount. So, when you get a stock that breaks down below a moving average, and then at some point here crosses back above, that's the remount. And oftentimes, once they cross that key moving average, they'll make a nice run here. So we have the gap down reversal concept here. We've got the remount concept here. And also with this trade, with a lot of these downtrending stocks, what happens is you have the 50-day and the 200-day, and the 50 is now going to be below the 200-day. And in a lot of classic technical analysis theory, they say don't buy a stock when the 50 is below the 200. For a trending stock, sure, but there's a lot of ways to trade. And I like to game these kind of reversal plays here. So there's a ton of ways to trade, and I think it's bunk if anyone ever tells you don't trade when the 50 is below the 200. Actually, that can be a very good setup. And here we have that moving average sandwich here, where we've got the 50-day, and now we've got the 200 up here. That's going to give us a good target. May provide a little bit of a resistance, but what I do like, it's already tested this moving average once before. So oftentimes you get one test, you get like a mini test here in late June, early July. And so the third time could get the breakout here. But at any rate, what I'm doing here now is I know my target here, at least my initial target, is at the 200. And that's what I put in the alert here. First target is the 200 MA, and the final target will be post breakout. So I'm going to set my initial target here at about 101. We've got the moving average here at 100 and 141. So I can put my initial target there. I've got 400 shares. Maybe I take 200 off here. When we get to that point with $95, that would be $5. That'd be $1,000 right here. And then if we can reach here to the once it breaks out, assuming it breaks out, we have a defined range here right around 110, which is the previous high here. That could get us another 10 points, which would be another 1,000 on that second position here. Or I could decide to play the whole thing here and play for the 3,000. Actually, that would be, yeah, $3,000 move. So a number of ways to play it. I usually like to take some off at that major resistance level. And we're risking 3 points here. So it's actually, the initial part of it is a 5-to-3 trade, so almost 2-to-1. But when we factor in the expectation of a breakout, it actually becomes more than 2-to-1 at this point. So there we go. We've got the gap down, overreaction reversal, remount, and now we're in the midst for our target of this moving average sandwich. And that's the way I like to play a lot of these overreactions to earnings gap down. So this is a live trade. You know, in the last blog post here, we talked about the Brazil trade here. Entered at 134, we're at 148 now, and this is a live one we're monitoring also. And I'll take some off here at 155, but I'm going to start doing more of this analysis of some of my live trades here as we go. So there's no looking back and just cherry picking your best trades. We're going to watch this thing as it goes, and if I get stopped out, I'm going to put out a video saying this one didn't work, we got stopped out. So if this thing hits 92 here or 91.50, I'll be stopped out and we'll put out a video. If I hit that initial target at 100, you'll get a video at that time. So keep an eye out. We're going to do a number of these live trades here. Whenever I hit that target on Brazil or Netflix, we'll do another quick video here. And remember, guys, bullsonwallstreet.com. This is the trade report here. Members are alerted to all this stuff and get my daily videos and kind of trade alerts and what we're looking to do here. Just go to Swing Trade Alerts and sign up here for a monthly, quarterly, or annual plan. The annual plan's 50% off, a fantastic deal. So until next time, have some great trades for me.